Good evening, everybody. I'm Bill Griffith, in tonight for Tyler Matheson.
And I'm Susie Garrett. Good evening from me as well. We begin with the bears coming back to Wall Street today. Stocks fell sharply after comments from two top Federal Reserve officials. The presidents of the New York Federal Reserve and the Philadelphia Fed gave conflicting speeches on when interest rates will go up. Investors got the jitters after the Philly Fed's Charles Plosser said a stronger U.S. economy means policymakers might decide to hike interest rates, quote, sooner rather than later. Now, even before Plosser said that, stocks were already in the red following a round of disappointing earnings and outlooks from some top retailers, which is fueling concerns that the American consumer is just tapped out. Here's how things looked by the closing bell. The Dow fell 137 points, the Nasdaq down 29, and the S&P lost 12 points. Also weighing on the blue chip average, Caterpillar. It tumbled almost 4% after reporting a decline in retail machine sales. Bob Pisani has more on today's action on Wall Street and what investors are really worried about.
Stocks started weak and they stayed weak. The immediate catalyst was disappointing earnings from a number of big retailers, including Staples, Dick's Sporting Goods, TJX, and Cato. Not only did they disappoint on earnings, several lowered guidance for the current quarter. Now, you can't blame that on the weather. Regardless, the consumers are definitely not buying as much apparel. It's not clear if the reason is because they've got less money or because they're spending it all on cell phones and other electronics and games. Stocks drifted lower again in the middle of the day with heavy volume in the small-cap Russell 2000 ETF as biotech and internet names were once again under pressure. Those names sold off big in March and April, but they've been more stable in May. Commodity stocks like BHP Billiton and Vale were weak as well as there were worries about slower growth in China. Philly Fed Chief Charles Plosser also commented in the middle of the day, saying a strengthening U.S. economy may force the central bank to hike rates sooner rather than later to stay ahead of inflation. But stocks did not act like the economy was improving today. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.